Introduction to ethical leadership. Ethical leadership refers to the practice of leading with integrity, responsibility, and transparency, while setting an example for others to follow. Ethical leaders are not only concerned with achieving business goals, but also with promoting an organizational culture that values ethical conduct, accountability, and respect for all stakeholders. Ethical leadership is essential for creating a positive workplace culture, building trust with stakeholders, and ensuring long-term organizational success. It goes beyond simply adhering to rules and regulations. It is about making decisions that align with core ethical values and demonstrating those values through action. The role of ethical leadership in business building. Trust and integrity. One of the most critical aspects of ethical leadership is trust. Ethical leaders build trust by consistently making decisions that are transparent, fair, and in the best interest of all stakeholders. When leaders demonstrate integrity, employees, customers, and investors are more likely to trust their decisions and support the organization's goals. Example, a CEO who admits mistakes, takes responsibility, and works to correct errors will earn the trust of employees and stakeholders, reinforcing a culture of openness and integrity. 2. Leading by example. Ethical leaders lead by setting a strong example. They don't just enforce ethical behavior, but also demonstrate it in their own actions. By upholding ethical standards, ethical leaders inspire their teams to do the same, promoting an organizational culture rooted in ethical decision-making. Example, a leader who treats employees with respect, maintains transparency and communication, and makes ethical decisions even when they are unpopular sets the tone for the entire organization. 3. Accountability and responsibility. Ethical leaders take full accountability for their actions and decisions, both positive and negative. They encourage accountability across the organization, creating a culture where everyone is responsible for their actions and where ethical misconduct is addressed promptly. Example, an ethical leader who encourages open feedback, holds employees accountable for ethical behavior, and addresses unethical actions immediately demonstrates a commitment to ethical standards. Principles of ethical leadership. Several key principles underpin ethical leadership. These principles guide leaders in making decisions that reflect moral values and help them navigate complex ethical challenges. 1. Integrity. Integrity is the foundation of ethical leadership. It involves being honest, consistent, and doing what is right, even when it is difficult. Ethical leaders must demonstrate personal integrity and promote it within the organization. Example, a leader who refuses to engage in bribery or corruption, even if it could benefit the company financially, demonstrates integrity. 2. Fairness. Fairness is essential for ethical leadership. Leaders must treat all employees and stakeholders equitably, ensuring that everyone has an equal opportunity to succeed, regardless of race, gender, or background. Example, a leader who promotes diversity, enforces policies against discrimination, and ensures equal pay for equal work is demonstrating fairness. 3. Transparency. Transparency means being open and honest about decisions, processes, and business practices. Ethical leaders provide clear, accurate information to stakeholders and do not hide important facts or actions. Example, a leader who regularly communicates with employees about company performance and challenges demonstrates transparency. 4. Respect. Ethical leaders show respect for others by valuing their opinions, recognizing their contributions, and treating everyone with dignity. Respect is crucial for maintaining positive relationships and promoting a collaborative work environment. Example, a leader who listens to employees' concerns, values diverse viewpoints, and fosters an inclusive environment demonstrates respect. The role of governance in business ethics. Governance refers to the systems, policies, and processes by which an organization is directed and controlled. Strong governance structures are essential for maintaining ethical standards within the organization. Governance ensures that business practices align with legal requirements, ethical standards, and the organization's values. 1. Board of Directors and ethical governance. The Board of Directors plays a crucial role in promoting ethical governance. The board sets the ethical tone at the top by establishing policies that promote ethical behavior, overseeing compliance with ethical standards, and ensuring that the company's leadership follows ethical guidelines. Example, a board that implements strong oversight of executive compensation and ensures it is aligned with company performance rather than short-term gains helps maintain ethical governance. 2. Establishing ethical policies and procedures. An organization must have clear policies and procedures that guide employees in making ethical decisions. This includes a code of ethics, anti-corruption policies, guidelines for whistleblowing, and procedures for addressing unethical behavior. Example: a company that establishes a well-defined code of ethics and provides employees with training on how to handle ethical dilemmas is fostering an ethical workplace. 3. Risk management and ethical compliance. Effective governance includes the management of ethical risks. Organizations must assess potential ethical risks, such as fraud, corruption, and discrimination, and implement strategies to prevent or mitigate these risks. Example: a company that regularly conducts ethics audits and internal reviews to ensure compliance with ethical standards and regulations is demonstrating proactive governance. 4. External audits and accountability. Governance also involves external audits that provide an independent assessment of the company's adherence to ethical standards. These audits ensure transparency and accountability, helping organizations avoid ethical misconduct and maintain trust with stakeholders. Example: a company that undergoes regular third-party audits of its financial practices and ethics policies can demonstrate its commitment to ethical governance. Ethical decision-making framework for leaders. Leaders can use an ethical decision-making framework to guide them in making ethical choices when faced with complex situations. The following steps can help leaders ensure that their decisions are ethically sound. 1. Recognize the ethical issue. The first step in ethical decision-making is recognizing when a situation involves ethical concerns. Leaders must assess whether a decision might violate ethical norms or principles, such as fairness, transparency, or respect. 2. Gather information. Leaders should gather all relevant information about the situation to understand the context and the impact of their decisions on stakeholders. This information helps make informed ethical choices. 3. Evaluate the alternatives. Leaders should evaluate the available options and consider the potential consequences of each. Ethical decision-making involves balancing short-term and long-term consequences, as well as considering the impact on all stakeholders. 4. Make the decision. Based on the evaluation, the leader makes the decision that aligns with ethical principles, values, and the organization's mission. The decision should prioritize the well-being of stakeholders and contribute to the greater good. 5. Communicate and implement the decision. Once the decision is made, the leader must communicate it transparently to stakeholders and ensure that it is implemented effectively. Ethical decisions must be supported by clear communication and action. Ethical challenges in leadership. Leaders often face complex ethical challenges that require them to make tough choices. Some common ethical challenges include: 1. Balancing profit with social responsibility. Leaders must often balance the goal of increasing profits with the need to act responsibly towards employees, communities, and the environment. Ethical leaders prioritize long-term sustainability and stakeholder well-being over short-term financial gain. Example: a leader who chooses to invest in sustainable practices, even if it means higher costs, demonstrates a commitment to social responsibility. 2. Handling pressure to compromise on ethics. Leaders may face pressure from stakeholders, such as investors or executives, to compromise on ethical standards for financial gain. Ethical leaders must resist this pressure and remain committed to their values. Example: a leader who refuses to cut corners on safety regulations to reduce costs is demonstrating ethical leadership. Summary. Module 8 focused on the importance of ethical leadership and governance in maintaining business ethics and financial responsibility. Ethical leaders promote integrity, fairness, transparency, and respect, and they foster a culture that values ethical behavior. Strong governance frameworks are essential for ensuring that ethical standards are upheld throughout the organization. By applying ethical decision-making frameworks and taking responsibility for their actions, leaders can guide their organizations toward long-term success and build trust with all stakeholders.